Well, hi guys, welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka.
And this is not the midday market mood check, and this is the closing bell. And I'm Yatin Mota, of course.
Yeah.
The best part about today's market is that we don't have any gainers to discuss, neither any
But there
broken
are
stocks to discuss.
handful of them.
Yeah, just
But
handful of them.
Yeah.
And obviously, today's market panic is something which a lot of us have queries on. Obviously, a lot of stocks to discuss, a lot of themes to talk about. But I think Nandita, today's session was something which was marred by the massive sell-off in mid
Mid
caps,
and
small
small
caps,
caps, yeah.
SMEs, and people are
PSU
also
stocks.
blaming the regulator
Yeah,
because
of course.
SEBI chairperson had said that there is froth of higher
Building up,
valuation
yeah.
plus manipulation, which is likely to be found in certain small and SME stocks.
Yeah.
Yes, a word of caution for retail investors: invest systematically and invest with a lot of caution, precaution, with a lot of research, because it's a hard-earned money, and just by putting in some small cap penny stocks, mid cap stocks, wealth doesn't get created.
Yeah.
So invest wisely and invest in an environment wherein you can probably average out certain investments, especially the ones in the mutual fund industry.
That's true. So, of course, word of caution coming in. Although I think there is no need to panic as such, but
Yeah.
of course, there has been quite a bit of selling in the broader end of the markets, and it's not just a one-off. We've been witnessing sell-off in the broader markets for the last few sessions, right, Yatin? In fact, it's the third straight day of a 2% plus
Yeah.
kind of cut coming in on the Nifty Smallcap index. But today, of course, the sell-off was much more than 2%. It was 4% for the Nifty Smallcap index. Even the mid-cap index, Yatin, for the year, it has turned negative. And if you look at both the small and mid-cap indices, from the peak, both these indices are down somewhere around 20%. So that's
Correct.
a sizable cut coming in. But let's not forget that we've seen a very good rally over the last 1 year or thereabouts. In comparison to large caps, which of course in market experts were saying have yet to catch up with the broader end of the markets. But today's market action, just to sum up as to what really happened, stocks were withering away this Wednesday, so to say. A near 350-point cut coming in on the Nifty, breached that 22,000 mark, a very important psychological level that experts were saying was the new base for the Nifty.
Yeah.
But we've just about ended a shade below that level. Sensex has plummeted nearly 1,000 points, and over 50 stocks in the small cap index have seen double-digit losses today, Yatin. And if you look at the breadth, it's dismal, and to say the least. I think 95 or 100 shares gaining to every 2,500 shares losing.
So almost 1:24 is where the advance decline ratio was.
So that's extremely.
And 500 stocks,
weak.
Nandita, on the lower circuit. So a huge amount of stocks which hit the lower circuit as well.
So I mean, a lot of pain in the broad end of the markets. All the sectors ended in the red. Realty, yesterday, Yatin, I pointed out, was down 5% today as well, among the top sectoral laggards. Metals, oil and gas, autos, all of them badgered in today's session. And a lot of sell-off in the PSU stocks as well, which of course Yatin will be highlighting in a bit. But if you look at some of the other losers on the Nifty, Power Grid, Adani group of stocks were beaten black and blue. Coal India, NTPC, metal names like Tata Steel, but gainers, as I said, were only a handful, and a few that you can almost count on your fingers. So ITC, of course, after the block deal, wherein BAT has sold stake. ICICI Bank, so private banking names that are not participating, have emerged as gainers, including the likes of HDFC Bank, Cipla, Bajaj Finance, that was also an underperformer today among the gainers, and Dr. Reddy's. So just a few gainers. But Yatin, let's talk about the PSU stocks. A lot of sell-off coming in there. Some mutual fund action also that you are keeping on your radar.
Absolutely.
Which are the mutual funds that have exited some of the PSUs?
So, Nandita, the biggest part about PSUs is that we have seen a drain run, and obviously the CPSE index or the bank PSE index has seen smart gains, 25, 30, 40, 50% returns in some of the cases have been there. Still, PSUs are better off on a 12-month basis, but from the peaks, a market capitalization of nearly 10 lakh crore has been wiped out from the PSU stocks. The 70 stocks that we are talking about and the ones which you are talking have seen a big market cap loss from 55 lakh crore odd market cap. Today the market cap fell to lower than 45 lakh crore. So yes, a 10 lakh crore peak market cap loss is what we saw in the PSU stocks. And why is this happening? Because a lot of mutual funds, Nandita, are churning into PSU stocks. and exiting PSU stocks. So let's find out which are the funds which have sold, PSU stocks. Starting with, Gujarat Gas, SJVN, Axis Mutual Fund and Quant Mutual Fund have sold shares here. One of the common names which has come across mutual fund schemes is exit in Bank of Baroda. The large cap funds of ICICI Mutual Fund, Aditya Birla Mutual Fund, SBI Mutual Fund have exit positions on Bank of Baroda. Obviously, Mirae MF has sold their entire holding in Nalco, and Nippon AMC in the large cap funds schemes have sold shares in SAIL completely. So these are the few stocks wherein mutual fund have taken complete exits from their fund schemes. Now, part exits are also something that we are tracking here for the month of February because the fact sheets for the Feb month is available. HDFC Mutual Fund sold a large chunk of NTPC, the shares wherein we saw some good appreciation coming in. So profit taking has been seen there. SBI Mutual Fund has sold LIC and SJVN, both of these stocks. And ICICI Mutual Fund has sold partly their holdings in NHPC and Oil India. So, whole host of stocks that I read out are on the mutual fund radar, wherein a lot of profit taking or complete exits have been taking place.
Right, Yatin, I remember day before yesterday, I think we spoke about the Kotak note on PSUs also, where they had pointed out that, there's been a top-down euphoria building in by retail investors, and how the rally may not really be backed by fundamentals, because SJVN and the likes didn't really report great set of numbers also, right? So yeah, of course, PSUs getting hammered out of shape, and some of the mutual funds also exiting from that. But aside of that, no stocks really on our radar this afternoon, given the fact that it's been such a deep cut. But ITC was one stock that managed to hold on to 5% kind of gains throughout the session, given the fact that the much awaited or much talked about rather stake sale by BAT, the British American Tobacco, took place today. 3.5% stake was sold, in fact, in a block deal at 400 rupees per share. In fact, for further stakes, BAT had already said that they won't sell stake beyond 4%, right? 25% stake they will maintain in the company. So 0.5% stake, if at all they want to sell, that will happen only after a lock-in of 180 days, right?
Correct.
So that kind of overhang is out of the way. That's what brokerages are saying, that supply overhang is out of the way, and which is why, although the stock has come down 20% from its peak, this could be a good time to buy into the stock. And of course, if you look at some of the brokerages, CLSA, HSBC, they have all upgraded the stock. In fact, I was talking to Sher Khan also today. They have upped the target price to 515 rupees.
Okay.
Of course, the stock was anywhere between 400 to 500. It was range bound, right? But now let's see. We can see the stock coming out of a range and resuming its rally. But you also reported that although the names haven't come out as to who have bought, but in the morning I saw you were reporting that GIC, Singapore and Capital International could be among the people who may have, or funds, international funds who may have bought stake. But all in all, ITC looking good now. The conversations I've had with analysts are saying that on a YTD basis now the stock is down 10%, but this could be a good opportunity to buy the stock. Because even if you look at segmental performance in the third quarter, cigarette business was subdued, but they are scaling up that non-FMCG part of the business as well. So going forward, earnings could also be better, and hotels business of course continues to do well. But all in all, that was one stock that was on my radar this afternoon, ITC. But looks like the March seasonality is playing out in the market. And we'll have to see how really things pan out. Tomorrow, of course, will be crucial, and Friday as well, because the result of the stress test will be out, right? So markets will be watching out for that. Yatin, anything else that you picked up from experts that you want to add?
So, as you said, March is a seasonal thing that impacts the markets, especially the mid caps. A lot of, advanced tax payments happen. A lot of liquidity crunch is usually felt in the month of March. We have a lot of tax adjustments. We have profit taking. We have funds also which usually shuffle their portfolio ahead of the financial year closing. So, all of that has an impact on the markets. In general, a lot of run-up already had happened in this financial year. People are sitting on good profits. So most of them are also looking to book profits. And in the panic, probably the decision making is fast to really sell shares and move out. So that is what is happening. But let's hope this correction doesn't last much more. Tomorrow is the weekly expiry. So let's see how the index behaves. But yes, mid caps are slightly under bad shape. And probably this would be the case for the next few days or so. Probably you should find some good stocks to invest systematically into, or probably good funds in which you can invest your hard-earned money. But yes, research it well, take advice of a financial advisor, and do always tune into Money Control for expert advice and what really is happening in the market to be really on top of what you decide, to do with your hard-earned money into the stock markets.
Well, that sums up pretty well as to how you should really go about investing in the kind of markets that we are witnessing now. But for now, it's a goodbye from me and Yatin. Of course, we'll be back with the markets at 9 a.m. tomorrow on opening bell. So don't forget to tune in. We'll try and get you more expert advice as to how you should be navigating this, volatility in the market, and which are the pockets that now you can look at investing in. But for now, goodbye. Thanks a lot for watching. Stay tuned to Money Control for all your other news and updates.